Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick with you this morning on kind of a light news morning for the market. We have a couple of notable analyst commentaries to discuss. We have the Apple event today. Biogen is buying back some stock. So we'll just kind of run through what strikes our fancy this morning and take questions from our chats. Our guest today is Jake Wujastyk. He's from TrendSpider, a automated technical analysis platform. He would join us and break down some charts and some trades at 8:35. In the meantime, Joel, what's the word here? The overnight session. Why are we down?
A little follow through from the week close on Friday. I had the higher open off the Mueller report, but then they hit it. Japan week, China week, India week, weak overseas markets. Pre-market low comes in at 27.90 and a quarter. We're a good 14 handles above that. Underneath that, if we happen to take out that low, I see a pair of lows from March and 12. March 12 and 13th, let's just call it 27.86. Crude in the red by 27 cents here at 58.77. Gold back above 1,300, up 540 at 13.70. And silver in the green by 12 cents here at 15.53. And let's bring in Triple D. We won't talk too much March Madness here because I don't know if we have a big sports crowd here, but while Michigan moves,
we do.
So Dennis, were you a little nervous during that the final event?
Well, my bracket's falling apart now too since after I had I think it was 15 out of so. How many games was first night? Was it 16 games on the first night?
Yeah, 16, then 8 and 8.
Yeah, since I had 15 out of 16 right on the first night, I've fallen apart in my bracket. Now I only have 34 of 48 right. So still have all the main teams in, but yeah, I mean, if I picked Duke to win it all. So if they would have lost last night, wow, not only a huge out, it would have broke 90% of the brackets probably out there. But so it wasn't like a wild pick. You know, you'd still maybe be in it because you're probably knocked 90% of the people out. But the people who wouldn't have took Duke were hoping and obviously would be laughing if Duke lost. But Duke won. So crisis averted, at least in the short term.
All right. So we got some action here today. Big IPO week. That's not till a little bit later in the week here. But let's just survey the damage from Friday.
Yeah. You know, you could almost do a damage show here from Friday. And I don't think a lot of people saw this coming. When we started Friday, and the goldfish memory, forgive me, kids up all night. It was a late night. But goldfish memory here. What I know we were down Friday, but we opened up Friday. Like I don't think we started.
No. You know what happened?
Were we in the red right off the hop?
Yeah, we were in the red deep. We closed at the high of the move, which was and then they hit it overnight. They were down 13, 14 handles.
Yeah.
And I looked at some of the positions I had, and I just said damage control because I had. You know, I thought, oh, we're breaking out. You know, I finally went with all you guys. We're going to 2,900.
Yeah,
I finally listened
to fake out.
And I was like, oh, my God, what am I going to do? And I was able to wiggle out of most stuff. I mean, the only one thing saved me, and that was Twitter. And I was just looking, and I'm like, why is my P&L not super red? And I don't know if there was some Twitter news off the hop, but it was, I think it was Trump said something about not privatizing, you know, or not going after these companies. But anyways, the market was going down and that was going up. So that was the savior. Just real quick, I was looking for that gap fill in Twitter from earnings at 33.75. It did do that by a considerable margin, but backed off. But this might be one of the stocks. And if the market's weak, you know, it's not having a great week, this one may be showing a little bit of green here.
It wanted to go higher on Friday. It was just the market was not letting it. I mean, it had a great day on Friday to close in the green, but right on that, obviously that headline, whatever it was, we blasted off from 32.50 up over $34. I'm still long this one for a swing trade. It's my only swing trade long on Obviously, the overall market makes you nervous on any long swing trade here right now, but I'm not throwing. This says D, obviously, because we got ball season coming, and I couldn't find my Michigan hat here this morning, or I would have wore that. But and I'm having a really bad hair day. It was late night, so I had to have a hat today. But I'll tell you, if I had the bull and the bear hat on, I would still have the bull hat on here. You have a lot of people who are ready to throw in the towel on this rally because we had a 400-point down day. But let's really, really put it in perspective, Joel, before you get all bearish on me. You've had a hell of a rally. So can we pull back? For sure. Can we pull back even, 100 S&P points from here? Yeah, and I'll tell you, if you pull back 100 S&P points, I'm probably still going to have my bull hat on, because I think there's a lot of people, including myself, who are still underinvested and are going to be hoping for pullbacks to buy. That's why the last time we had a 3-day sell-off, we saw what happened. It came in with their buying shoes on. We've had a 1-day sell-off, guys. We are back. We gave up 1 week's of gains. We are literally just back down to the March 12th, where we were trading on March the 12th, which is literally 12 days ago. So yes, it was a very bad day for the markets on Friday, but come on, we've been straight up, for 20% because we pulled back 2%. I'm not throwing in the towel on this bull.
Either am I.
Joel, we're keeping it on.
But no. But I can quantify it, okay? And I'll tell you right now, if we don't go back, the longer it takes to go back up to that 28.6250 and make a new high for the for the move here, the more I think we back and fill here. I mean, holding Friday's low, we're just at it right now. If they can prop up the market today.
They are propping it up as we speak. We just went green.
Okay. All right. So, we'll see if we can hold the lows from Friday, get back up into the, 20. We don't even have to go to 28.60. If we can get up to 28.20, 28.30, get a couple sustained closes there, then I'll totally agree with you that was just the wipeout here. But, once again, coming off the quad witch expiration could be a turning point in the market. The fact that we're just, 50, 60 handles off the high close of the move makes me a little bit cautious here this week.
So, and I think, caution, if you've got a lot of swing trades on short term, I mean, we can pull back here. So, caution's not a bad way to go here. Just, taking the long term perspective, it's been a hell of a run. We need a pullback. And everybody's, I read this headline here on Twitter from Barron's today. And this just shows you the media, and let me just go grab my cell phone because I had it right up here. I was going to just read it on the show. It's ridiculous. So my cell phone's going very slow here right now. So bear with me. Actually, I don't have it in front of me. So I'm going to have to, I'll just have to try to remember what the headline was. But it said something to the nature of recession fears, Dow futures down 40 points. Dow futures down 40 points. Recession fears is the headline from Barron's. Dow futures down. What's 40 points on the Dow? You're talking about what's 40 points on 255? You're talking, or 40 points on, 25,000.
Nothing.
You're talking like a fraction of 0.1%. So you put a headline out there, the market is down 0.1%. Recession fears grip Wall Street. What? We're down 0.1%. Let's just cool it on the recession talks here. Yeah, it was a bad Friday, but you wanted to talk recession. It looked like a recession back in December. I mean, so I guess Barron's is selling high when they throw out a headline like that. So maybe, that's what you want to hear. But I think we are, very far here from recession fears right now.
Inverted yield curve, Dennis.
Is that what's going to do it all?
George is making some good points. The inverted yield curve, and we're getting out of my wheelhouse here. When we start talking yield.
Yeah, we're not economists here. Yeah, sorry, guys.
Yeah, we are not
a trader. And I'll tell you, and no offense to George, I'm just saying, you have a lot of economists, a lot of macro, that can look at a lot of different technical indicators. It's difficult. It's difficult to use economic indicators and, looking at the economy overall to predict the next move in the market. It's very difficult. The next move is usually random. I mean, you can look at all the data you want. It's a tricky market to even be using fundamental news on to invest in. That's why I'm more of a stock picker guy. I don't try to really call, obviously we look at trends and we follow the trends. And that's why I still keep the bull hat on. But, when I'm trading, I'm looking at individual stock and I trade market neutral for a reason, because it's difficult to call the market's next move. Like, I don't think, everybody, if you find somebody that's going to say, oh yeah, we're going to go back down and test the December lows, for as many people are going to find, you're going to say people are going to test the highs too. It's a tricky gig to use economic data to predict the next move.
I took one economics class in Michigan, and I took it pass fail, and I passed it. So there.
I actually have a minor in economics, so I took
there you go.
80 course in my university degree. So I do, but I'll tell you, I use zero economic analysis when I'm in my trading. I'm using the basics, and obviously I talk a lot of different stuff, and I'm doing different edges, and I do the index ARBs, I do a lot of different things. But from my swing trading perspective, and a lot of people like to do swing trades, if the market's at an uptrend and we're looking, like we still are, the trend is still intact, then I'm leaning more towards looking for longs and buying on dips. If the market overall is in a downtrend, I'm selling rips, and that's pretty much how I do, from my swing trading perspective, and jockeying my longer term portfolio. Although I wish I didn't trade my longer term portfolio.
All right, S&P is climbing back here. We did close under the cash here, so you are seeing the spiders up 13 cents. SPOOs are basically at the same level as the 5 o'clock close. They kind of hit it after the 4:15 close. So really, we're just all the action. We're just back right where we started from on Friday afternoon. But let's move on. I guess there's only one earnings, and we always talk about Winnebago. How'd they do, Spencer?
I actually didn't even realize that they had reported today. So let me pull it up.
Only stock on my list.
WGO. Their reports Q2 EPS 60 cents, beat by a penny. Sales of $432 versus $461 million. So a slight beat on the EPS and a miss on the sales. And have not looked at the chart today, so I have no idea what it's doing. But
it's in price discovery mode, because you can say, it's traded 8,800 shares, but 5,000 of that was just off exchange of 29. So that's, kind of, not even. But I will tell you, it has bid pretty good down there at 28.84, 29, 29.10, 29.20. Best offer is way up at 30.95. So it looks to me, at least initially, that this wants to go higher.
All right, and I'll just take yesterday's range, and I'll use that as my key for my analysis, like I always do. And we're trading just below Friday's high. So let's take out Friday's high here at 30.28, and then you can just see your daily levels coming into play. I think you could clear 30.28. I wouldn't worry too much about 30.52. I'd look for maybe closer to 31 on the downside. Dennis, so those bids are in the book, right? You were looking at the book.
No, these are live books.
Live bids. Okay.
Yeah, this is the pre-market. So I didn't look at the book this morning. So that's why I'm saying, I tell you, it's well bid in the pre-market. So these are people who are saying, I see the report, I'm willing to put my money where my mouth is, that this is at least opening flat or going higher. Because the 3,000 share bid on Winnebago in the pre-market is significant, and that's at 29. Then behind that is another 2,800, 2,884. So there's some money saying we're going higher.
I've always wanted to direct like a Winnebago for one Michigan game, and Lisa says no way. There's no way. I mean, we'd have to get someone to drive it, because she thinks I would just run everybody.
You could drive that. Yeah. Well, when are they going to come out? Tell Musk to come out with
a driverless Winnebago.
Yeah, driverless Winnebago. We want to see a driverless Winnebago. Tweet at Musk right now, somebody, and tell him PreMarket Prep wants a driverless Winnebago, so Joel can safely go and tailgate the Michigan game.
Yeah, we can call it the Model W. There's already perfect. It's already a letter for it.
Look at that.
Look at that.
Man,
Spencer. We got this all figured out for Musk.
It's done.
When are we getting Musk on the show?
Yeah. Okay.
Let's get Musk on the show.
I'll tweet at him. Let's go to the story stocks here. We just got to talk about Boeing real quickly. There's no bigger story stock than that one. To me, the fact that it took out support, I do seeing up 333. I mean, what's the true definition of taking out support? You did take out the low of the move. You're back above it. So if you are trying this for the long side, I'd give 361.53 the leash and let it go under that. But it's come back from this area a lot. Made a new low for the move. I just think there's just too much headlines. And I said it once, I said it 1,000 times again. Look how long it took for this CMG thing to be resolved. So I'm hands off for me on Boeing. Dennis, what are you doing?
on Boeing, I'm going to wait. And obviously, you're still holding. So that's the one good thing. We tested that low, 361. We got down and basically tested 363. You can say we took it out, but 2 points on a $360 stock. I'm going to say we haven't taken really out those lows yet.
Okay.
But again, there's headline risk all over the place there. And that's why I would not have a swing trade on this right now. It's going to be driven by the next headline. I don't care what the technicals look like. If they come out and they're fully blamed for this, it's probably going down. So, but we've had a couple bad headlines come out. It's held on. So there are still people defending that level. But again, it's starting to look a little bit uglier. And usually when you get a move and then a long consolidation of the move, if we were just not talking, took away the headline risk and just looking at the technicals, I would say lower, because you got to move down. You've got a 2-week consolidation of that move. And usually it will resolve itself from the previous trend, which was down. So the previous move, which was down. So that would push us down. If we went down, you could get down to the 320, 300 area. But the next headline could change all that. And that's why I'm not trading this on a technical basis. So jump back to Biogen, which is your other one that was always in the news. And when Johnny 175 wants our call on this one, I mean, we've given our call on this already. I still own in my long-term portfolio. I think long-term, you might be okay down here, but short-term, why be a hero? Why say that this is the bottom? Biogen company themselves are trying to be the hero this morning, and they were trying to stop their stock from going down. Spencer, let us know what they did.
A $5 billion buyback.
So this is basically trying to slap lipstick on a pig right now. And this is completely talking against my book, but obviously the company's, very disappointed that the Alzheimer's trial did not work out. I think they're looking at it and saying, well, the market way overshot here. And we'll be the first to say that, we're still got a lot of good drugs in the pipe. We still got a lot going on. We're still one of the biggest, if not the biggest biotech company out there. We're going to survive here. And that's why we're going to buy our back stock, and we're going to buy it back cheap. So is that good news for the stock shareholders? Yeah, but I think the whole reason for this buyback, in my opinion, is just to try to, say, hey, we want the stock to stop going down. It is lifting here this morning, but I don't think this is going to be the catalyst to drive us back to 230 or 240. I could be wrong, but I'm not coming in here and saying this is the bottom just yet.
Boy, my 15-minute chart on this goes all the way up to 320 here. So we need some major, we need some consolidation here. Pre-market high, they did get a little bit of lift off this. They did get up over 220. God, man, it's even hard to tell on this. 221.98. So if you think that this is great for the company, you want to see the follow through 220.98. There was some monthly support at the 220 area. If you're trying to pick a bottom here, there's absolutely nothing wrong with that. I would just lean on that low and close from Friday down at 216.49. And then the close was 218 or 216.71. So, if you're trying to pick a bottom, lean on those levels. You get stopped out. You feel like trying it again, try it again here. But not much of a lift.
I mean, they're trying to give it the vote of confidence. Maybe they do. Maybe this is. I'll tell you one thing though. From a long-term perspective, I'm not selling my shares down here. I don't think this is it for Biogen, and they're in trouble. This drug was a wild card. We had talked about that. It was in all likelihood it was going to fail. So I do believe in the long run that this is an overshoot. So I like it long term. If you're sticking Biogen in your portfolio at 219 and you're going to hold on for the next 5 years, I think you make money. And that's, but if you're sticking it in there because I think it's going to bounce, it's hard to say. It's bouncing this morning because of this news, but you could have said that on the first day at 230 and now you're 216 close Friday. So I've just learned the hard way that I don't try to, jump in and be a hero and call the bottom. I usually wait till stocks stop going down. Maybe this is going to be that day, but rarely what you see is just take off to 230, 240. You're not going to get a second chance at it. So usually to come down, especially after bad news like that, and you get a second chance near the lows. So I like buying, on the second dip down as opposed to trying to call where the first dip is going to stop.
Okay.
That's it. That's my point. So continuing on.
I think
let's go to the Apple event.
Well, I think we may have lost Joel there for a second, but
Joel's on mute again?
No, I think his internet just conked out on him. But yeah,
he's just looking like he's lost there. Okay,
right.
so anyways,
right,
Apple event.
Yes, Apple event. So this is interesting. We have Google and Apple both with news today, sort of related to each other. Oh, Joel's back now. So the YouTube / Google news is that they have canceled their plans to develop high-end dramas and comedies, essentially backing away from the Hollywood push. And the Apple event today is essentially Apple doubling down on the very same thing. They're expected to announce a streaming service, like a TV streaming service to compete with Netflix and Hulu and Amazon, and also a news service that would charge about $10 a month and essentially be the Netflix of news. So those are the two things we're expected to get today from the Apple event.
I mean, Netflix got killed on Friday, so a lot of media would attribute probably the competition coming for them, but everything got killed on Friday. So I'm not going to say the Netflix move was all because, you know, Apple's going to come out with a competing streaming service. Is it good news for Netflix? Probably not. I mean, Apple can do a lot of things right, and you know, but Apple's trying to get into everything here. Netflix is still, they got a long ways to go to be saying, oh, they're going to be major competition for Netflix. I mean, everybody has Netflix, so the major concern I would just say if I'm a Netflix shareholder is that it was an ugly day on Friday, and you start taking out the 355, 350 area. This has had a hell of a run too. I mean, you could have a significant pullback, at least down to 320, and still even be in an uptrend. So I think it just got overdone. I mean, everything pretty much, you know, Joel, and you made a good point there earlier on the breakout. I mean, everything kind of, you know, has been in needing of a pullback there. You got the breakout on Thursday and the big day up day, and that maybe suckered a lot of people in. And then Friday, it, you know, peeled it off. And we always try to, you know, whenever the crowd gets all on one side, we know they get punished. So I think you had a lot of stocks that looked like they were breaking out on Thursday. And obviously that came all off the table on Friday. Netflix was one of them. Netflix making a new high on the move on Thursday. People saying, okay, this is the new high. This is going to be the run. You know, we're going to make the run to 400 now. Those people are scrambling now if they've got long. And obviously on Friday, if they didn't sell on Friday, they're looking at the stock down 4 more points and probably get nervous that, oh, what's Apple doing? And, you know, so it's difficult to be, you know, trading stocks. And the breakout on a lot of stocks on Thursday was a classic fake out.
And I think the winner in the Apple Netflix thing will be which one picks up pre-market prep. I think that will be the big determinative here. I'm looking at Netflix here, did get hit on Friday, trading a little bit weak today. And I think you're opening up into a really interesting area here. Your 3 and 4 day lows are right here at 357. So that's your area, a little wiggle room. I mean, you can't say exactly 357, but that's the area of support it needs to hold. If not, I see it trading under 354. I see a 53.80 low and a 50.03 low. Apple flat on the session, weak on Friday. Historically has run up in front of these events and then historically, you know, sells off. But showing a little life here, green on the session after being deeply in the red. So I think I'd be kind of quiet ahead of that. Man, yesterday's high, I'm not even going to give you yesterday's high or Friday's high, the high of the move. For me, my level of interest is that high close of the move from Thursday at 195.09 if we do get a $4 rally in Apple.
I mean, that's a pullback too, and that's a classic reversal day. So didn't get the full key reversal because did not make a new low from the previous day, but darn close. So it could be one of those situations where if they don't, you know, like exactly what they were saying, they could sell it off on it. So I probably wouldn't want to hold Apple long through the event if I was in it for a trade. Obviously, I still have my long-term portfolio, and I'm sticking with that.
All right. Oh, just the one quick thing. I know we had some people in there talking Biogen here, and maybe you look, you know, different reasons for buying it. I talk about seller's exhaustion here. Is everybody out that wants out? The stock trades $1 million, $1.5 million, traded at 21.6 million on Thursday, traded 8.5 million on Friday. So maybe, you know,
it's probably due for a bounce.
A lack of sellers is all I'm saying. There's no fundamental reason, no buyback reason. It's just like everyone that's out of the pool is out now. Or not everybody, but the people that wanted to sell the big pieces that said, hey, you know, an institution, I'm done with this story. I'm long for $50. I'm ringing the register. So we'll see that you know, seller's exhaustion rally. We'll see if it materializes today in BIIB.
Over to the ratings parade here just for a minute. We got one major one I want to talk about. Akamai, AKAM, is getting downgraded to sell at Deutsche Bank. And whenever you get a sell rating from an analyst, that's always going to get some headlines, always going to get hit pretty hard. And we had an ugly day for AKAM on Friday, and that continues significantly here this morning, down another 4.5%. So From bliss to a word that I can't say on the show very quickly here for Akamai. Joel, what are your thoughts as
Oh,
a
boy.
two-day ugly move?
Yeah, I mean, just trading at the lows of the pre-market session too, right here around $68. See if I can. There's some lows here.
There is some.
Yeah, yep. I don't know. I don't know where do you step in here because he's had such a major rally. I see those lows around 68. It's just the problem is if that doesn't hold, man, bunch of lows around 68. Yeah, then it's wide open to 67.25 and 66.06. So let's see if you can hold those pre-market lows at 68, and then if you get anywhere near 71.18, that's the bottom of yesterday's range. So we'll keep an eye on 68 here in AKAM.
I mean, it was an ugly day for a lot of the cloud stocks, like Twilio, TWLO, that had a full key reversal from the day before. They're coming down, making new low on the move, but continue on like just through all the names. I mean, if you were a tech, it was a tech wreck on Friday. And that's why a lot of these headlines come in here now. You know, the media loves these headlines. It drives, you know, readership, it drives views. So they're going to throw on and make it sound really bad. And it was. Friday was an ugly day for the market. And it was unexpected after the day before. So, you know, that makes, you know, a lot of institutional money managers are thinking right now. So I will just say it is a very important day for the market here today.
Mm-hmm.
You know, we were down significantly overnight. We have rallied back. That's the good news. The bad news is I think you're probably still going to have a few nervous Nellies out here. So I would not be surprised if you see some follow through selling at least early. What happens? Do the buy the dippers come back in and emerge in all these stocks? Or are they going to just sit on the sidelines for a little bit? If they sit on the sidelines, this little one-day sell-off, you know, which could potentially become a two-day sell-off, could potentially become something weaker. We don't know that yet. So I leave the bull cap on because trend is still up here right now, but cautious on the buy the dipping with a short leash if you're doing it, because you know we saw Friday, you know what can happen quickly is these things can start to really roll over, and if they start to roll over and make new lows, so you know looking at a Twilio, if TWLO starts to roll over here this morning and start to take out, and you know it's not good news that it's not trading the green already, but take out Friday's low 128.66 goes under 128, you could see this at 124 in a heartbeat. There's a lot of people who are, I mean the stock was $80 at the beginning of the year. People are sitting on a ton of profits, and they probably don't want those profits to go away. So you do have to be cautious here.
Do you run a Gene Munster on CNBC Apple algorithm? Every time he comes on, that thing just rallied like $1. That's when he was making some comments on CNBC.
What was this on?
Gene was on.
Talking
Gene,
what?
I thought he was talking Apple, but I don't have the volume on during the show, but I'm probably talking
Apple's
about that.
$1 now, you're right.
Yeah.
Was that just because of Gene just now, you think? I mean, Gene moves stocks. He comes on CNBC and, you know, he will move stocks. So if he said something positive, you know, you got to, CNBC, one thing I tell you got to watch it because there is movement that comes off of that show. You get the right analyst on, you get the right person on, and they can move stocks. And if we're really in a full-on bull, rah, you'll see any commentary from anybody will move a stock. So you have to be aware of that. And often, you know, you see an analyst come on that's, you know, covers a sector very closely. If they say something bullish or bearish, it's going to move that sector or move that stock.
All right, seconds away from imbalances here, and something tells me that they're going to be pretty mixed today because
it's going to be tricky. I don't know though. It's going to be it's going to be important here for the market right now just to see what's going to happen here with the imbalances. Because do you have follow through sellers coming in from Friday, nervous Nellies, or do you see some people, you know, not that nervous? So right now we're going to get those numbers, and they are to the sell side. They're to the sell side. They are not huge. Some of the banks, and the banks are actually rallying here this morning because the TLT is down. TLT is down here this morning, and the banks probably just a little relief rally. They're on the hardest. But Bank of America, see 176,000 to sell. It's trading up 10 cents here right now. That's significant, but with the volumes that were kicking around on Friday, that could get gobbled up too. I see Alibaba 39,000 to sell. Baba is down here another $1.50. That's why this whole market here right now, this whole market rally is a little bit, you know, I don't know what's behind it other than just maybe some people coming in from last night and continuing to buy the dip. I'm a little bit cautious here with this market rally. I think you could see some follow through sellers after 9:30. So from a short-term day trading perspective, I like selling this rip a little bit more than buying the dip. Still keeping the swing trade bull hat on though. So I'm just saying today you might see this rip get sold here at the open. and I'll probably be selling into this rip here at the open if we continue to rip. Walmart's had a sell imbalance for 4 days now in a row. That's a trend. That's something to note. Walmart has 58,000 to sell. Still trading in the, actually it hasn't traded really much this morning, just a couple odd lots, but it's offered down 20 cents. So Walmart, you're going to see open lower, I think. Twitter, which had a wicked good day on Friday, I'm still on that one. 37,000 to sell this morning. So a few sellers emerging in Twitter. I don't really see any buy imbalances. None of note. Visa 41,000 to sell. So that's putting more, making me think more that I'd like to sell this bounce as opposed to jumping in here this morning and saying that the selling is over.
What about, take a look at this Bank America chart for me here. If you were waiting for that gap fill, from earnings though. Yeah,
that's unbelievable. You look at that, and that's all interest rates not going up in the near future. That's all Fed being too dovish. I mean, all the bank charts look like this because I don't think anybody expected the Fed to be that dovish. And it doesn't sound like interest rates are going up at all. If anything, it sounded like they actually could go down later in the year, which is a complete reversal from where we were back in December. So that's what's happened with Bank of America. And it's down 10% in 4 days because of that. Is it going to bounce here eventually? Yeah. I mean, if you're selling it short now, you're way late to the party. But that being said, wow, that's a significant fall in 4 days. It's going to be one of its biggest falls, like with no news in a long time.
Yeah, well, I'm just saying the point of origin is if you wish you had bought it before its last earnings report and you were waiting for the gap fill, you did get it. So we'll see how it holds up today. But not that low. I mean, I like to see it under $27. And I think if you don't get it under 27 soon, then all those people that were trying to buy on weakness may have to turn around and buy on strength here. Ugly 3 days. So it's due for an update here for Bank of America, trading in the green here by 13 cents.
Texas Linda was just saying, Gene Munster comments there was from CNBC was that he would not own Netflix, and by Apple saying he was talking Apple streaming.
Thank you, Texas Linda.
A catalyst. Yep. So good call, Joel. Without seeing the volume, you called that it was probably Gene. And Apple is now trading up $1.25 here in the pre-market, and Netflix has continued to fall. It's now down $4. So we'll see. Let's see at the Apple event. What time is that, Spencer?
It's 10. It's 10 a.m. Pacific, so that's
1 o'clock.
1 o'clock Eastern.
All right. So if you're trading Apple around 12:59, be aware you're going to get some wild movement. Netflix as well. So if you're trading Apple, day trading it around 12:59, you better be turning on and watching what's going on in this Apple event because it's going to move Apple and it's probably going to move Netflix too. Direction to be determined.
What about Google here? I mentioned the YouTube thing. Obviously, them backing out of Premier programming is not going to impact the stock in any way today, but it is indicative of a larger business strategy. They're essentially.
What's the headline?
That YouTube is backing out of their attempts to create a high-end programming and compete with Netflix. Essentially, they're just not going to do that now. So they're going the other. Apple. If Apple is doubling down today on programming,
Google's going the other way.
Google is going the other way. So.
I mean, I guess that's good news for Netflix to a certain extent, and that's whatever news for Google. They got a bigger fish to fry, is what it sounds like to me. So I mean, Google's down $3, 0.26%. If you go to the Qs, it's down 0.1%. Google sometimes, lately at least is moving a little bit more in the Qs. So that just makes sense from a ETF arbitrage perspective. It's not really moving that much more than it should be. Yeah. So I would say there's probably a non-event for them.
All right. I look at 1200. I mean, we are trading 1201.54. You had a pair of highs just before you broke out over 1230, right at 1200. I see 5-6 highs in a row. So I call that a support. See if it can catch 1200, get back up. And first resistance point would be Friday's close at 1205.50.
All right.
8:35.
Yep.
We got a guest?
We do have a guest today. How do you know? His name is Jake Wujastyk. He's with a company called TrendSpider out in Denver. They do automated technical analysis. So I figured you guys might like him. So he's got some charts he's going to share with us. We'll take a quick break, and I'll grab Jake. We'll be right back. All right, and we are now back with Jake Wujastyk from TrendSpider. Jake, how's it going this morning?
I'm doing great. Another week, to see what the markets are going to do. Last week to end the week off was very interesting. It's always interesting to see the VIX popping that much on a Friday and in the market tanking. So that definitely caught my eye.
All right, before we get into the charts, you sent over a few for us. We appreciate that. Give us a quick rundown. What is TrendSpider? What do you guys do?
So TrendSpider is an automated technical analysis platform, and we don't mean that in a way where our analysis is the way that you're going to look at the chart. What we want to do is automate your technical strategy, whether that's through trend lines, Fibonacci levels, certain price alerts. So for example, if you want to create different conditional alerts for a specific chart, if you're using a mix of lower indicators, moving averages, and price action, you can do that. So it's really a very robust system that aims to make trading and technical analysis more efficient for the user.
Meant for anybody who uses charts in any way in their trading.
Right. Investors generally aren't using charts as much as a day trader or swing trader, but it's really for anyone who's using technical analysis to make decisions in the market.
And you've got the full gamut of indicators on there?
We do. We are constantly adding some as well. We have a pretty big library at the moment on lower indicators and moving averages, but we are adding as users request new indicators.
All right, so let's get to some of the charts that you send over, because you yourself are a trader and you have indicators that you obviously prefer. I'm going to bring up the chart of the SPY you sent me over right now, and why don't you walk us through what exactly this chart is showing us?
Sure. So this chart is really kind of showing two things, right? So the first thing is the price action really since summer of 2018 has really kind of been deviating around the EMA 50. And so you can see the EMA 50, the yellow line with a little shade around it. And so when we look back at kind of this run up before the October move down, there's a lot of similarities that we're seeing now. And, I'm not a big bear right now. I'm not heavily short the market or anything, but I am interested in seeing this kind of pattern forming. And that is, we are getting close to possibly breaking down through the EMA 50 currently, very similar to how we were back in October. So to add to that and complement that price action move, we do have divergence that's occurring on the Williams percent range. And I like to use the Williams percent range to kind of get an idea of what is occurring on the momentum side of things. I've used it for years, and it's really one indicator that I've always found shows divergence before other indicators. In this case, we did have pretty strong divergence on the RSI 10 as well. So that really complemented and added to that kind of breakdown. And then we also have the vortex indicator, which I like to use for reversals. So generally, whenever you have big divergence between the blue and the red, and then you see a convergence between the two, whether that's blue over red or red over blue, that's generally signaling possibly a reversal in the trend. So if we look now, we did just break down through the kind of ascending wedge here. The EMA 50 has acted as support 3 times, as you can see through these arrows. So it will be interesting to see if we kind of catch a bid down there, or if this is just a big fake out before the next rip. We'll just have to see, but based on kind of what I'm seeing, I am seeing a lot of similarities between now and back in September, and we do have that volume uptick as well on Friday, so definitely something to watch going into this week.
Are these the main 3 indicators that you primarily use?
Personally, yes. I generally like to use MACD as a confirmation as well, but all in all, these are the 3 that I like to use. Obviously, when you're trading any different stock, you're going to have to optimize the inputs a little bit. So for example, the Williams percent range 10 in this case may not really show any type of signal on a different stock. So I really like to kind of optimize the inputs, but generally use this layer of lower indicators with moving average on the top as well.
How did you decide on those? There's like 1,000 indicators out there. How did you decide that MACD or RSI or Williams, how did you decide that that's what worked for you?
A lot of testing. So I've been doing this since I was, so I started trading when I was about 12 years old. Didn't really do any technical analysis until I was about 17 or 18. And then once I started to realize, price action can sometimes move with these lower indicators, I became interested in these momentum indicators as well as the vortex indicator lower down, kind of down the road. So the percent range and the RSI are really catching kind of the momentum. The vortex indicator is catching kind of the reversal of the trend. And then the divergence is really what I look for confirmation on kind of those two indicators for momentum. But at the end of the day, it was really just testing and kind of seeing what worked at the end of the day.
And just to confirm, the blue, looking at this chart here, the blue and red at the bottom, that's the vortex indicator that you're looking at. That's a question
and
from
it's
our
similar
chat.
to like the ADX, if you will.
Okay. All right, and I'll put these images in the chat after we're done here, everyone. So I want to move on. You sent us a few charts. SPY is one. Let's move on to Chesapeake here, CHK. Break this down for us.
So CHK is one thing that I like to trade, especially as a kind of a high beta proxy to oil. So for example, when I see oil looking good, I generally like to trade CHK just because you're going to get a few more points off CHK rather than just trading oil directly, or, I just don't like to mess with the leverage ETFs. So I like CHK from that perspective. In this case, we've really had a very strong pattern here with the dojis kind of forming right on the wedge. It's more of kind of like an ascending triangle, if you will, but right on this support here, each time we had this doji, we had a nice pop. So I've been trading these dojis every time we kind of consolidated here. And now what we can see is very similar to SPY. We're starting to see some of these divergences come into play. I wouldn't necessarily call this previous candle on Friday a hammer, but it does kind of show that buyers did step in at the end of the close or towards the end of the close. But for me, I've got an alert right at the bottom of the wedge. And so what you can do on our platform is you can essentially create an alert on any trend line or indicator. So in this case, I have an alert for whenever the price action touches anywhere within this shaded area on the EMA. So, if market makers or big boys are trying to kind of fake everybody out and make it look like it's going to hit the EMA when really it pops right above it, that's why we have this sensitivity here to capture those kind of shenanigans, if you will.
Chesapeake, a lower price stock, and you sent us another even lower price stock that I don't follow this one at all. I'm going to bring it up right now. Ticker was ENT. It had a big, let's just say a lot of volatility here over the past couple weeks. Break down this ENT chart for us here. I kind of looks like a fall off a cliff. But before we do that, why do you trade names like this? This is a penny stock. Why do you trade names like ENT?
So the way that I try to look at the market is if I'm going to the casino to play poker, and that sounds horrible, but let me, get my logic here. So when you go to a casino and you want to go play poker, you want to go play Hold'em, whatever, if you go to the table, it's generally easier to track and follow the bluffs, the nuances of the trader, or the nuances of the people at the table if there's not as many people there. And obviously you're going to be able to pick up on the big guy who's kind of moving the table, who's kind of controlling the table. So for me, when I'm trading smaller cap stocks, it's easier for me to kind of catch those blips in the radar where there's big blocks going through, or where there's a very similar move that's happened before, because maybe it's just one or two guys making the market and they've got very similar ways of doing that every time they do it, whether that's dumping or loading. So for me, I like to kind of follow smaller stocks to almost, if you will, count the cards of the stock. I can see who's entering. I can see, a lot better than if I was trading Apple. There's so many shares going back and forth. There's so much liquidity that it's really hard sometimes to catch if what you're seeing is a false signal, or if it's something that's just not as important than what you'd see on a smaller cap stock. So it's really easier to capture the kind of the movements and kind of the individual trades, if you will.
So smaller players, smaller stock. Break it down this chart for us in ENT. What do these indicators show?
So kind of back to the same layer that we were at, except in this point, I am actually not using the RSI. So what I'm doing is I'm using the 20-day percent range, and then I'm using the 10-day percent range. And the reason is the percent range on the longer term is going to kind of take out some of the false signals that we'd see on the Williams percent 10. As we can see here, it's kind of choppy at the bottom. These are more defined bottoms here. And so what I use the 10 for is I look for divergence. So we can see here, we've got this huge move down, and then we've got a green day on a bloodbath market day. And so for me, that's a signal that obviously there's somebody that thinks there's some intrinsic value down here, especially as the market's dropping. I always like to look for price gaps. So we do have the price gap above. That would be a massive move up. So I'm not necessarily looking for that, but it's something that I know other people are also looking at and may be a reason that they start to load. So on top of that, we do have the oversold signal on the percent range with the divergence on the 10-day. So anytime we have divergence, that's the slanted pink line. And so what I have on top of that is we can see back in April of 2018, essentially this previous resistance area is really now our area to watch above as resistance once again. So same thing, we've got this trend line, but then we've got some sensitivity around it to capture in case the price doesn't get right to that trend line. If it gets right below that, I'll be alerted. And so that's kind of where my price target is. I am currently in this stock, so I'm not really someone who's looking for 50 to 100% moves. I generally like a quick bounce. 10% is fine with me. And then you lock it in and you look to see what's going on. But for me, I'm really just looking at this back test, looking at every time that the percent range 20 was oversold. The vortex indicator 8 was also very kind of diverging here with the red over the blue. So if we see the red starting to converge towards the blue, that would indicate to me that we could possibly be reversing on the trend. So if we look back every time that we did have this divergence between the red and the blue, once the red crossed, that was kind of the confirmation of the short-term uptrend. Same thing with the blue. When the blue crosses the red to the downside, that's when you kind of see a confirmation of the short-term downtrend.
I have one question for you. I'm looking at the platform here and it's fully customizable. So if let's say I have a method of technical analysis, using, pure empirical data from the market, daily numbers that are generated intraday or daily, can those then be input to your system and it will design a trading system for you based on that? Or is it just integrated into the chart analysis? Let's say you created your own oscillator. Let's put it that way.
Mm-hmm. We do not have the ability to create your own oscillator yet, but what we do have the ability, and Spencer, I think we had one more image with the conditional alerts. If we could go to that real quick.
Yeah, got those up right now.
Oh, beautiful. Okay, so this is an example of a conditional alert that you can create. So you're taking a bunch of variables, whether those are on the lower side of the chart, on the upper side of the chart, and you're creating conditions. So for example, for me on SPY, what I'd be looking for is a breakdown of the percent range below -75, the RSI below 40, vortex crossing. So whenever the positive is less than the negative, that would insinuate that we are getting that cross. And so you can go in and really create these decision trees, if you will. So our first decisions are on the top. All of the following criteria must become true. And then we can create another conditional tree where any of the following can become true. So if you want to look for, let's say, some bearish price action at the top, but then you want to possibly also look for some bullish haramis or bullish engulfing, you can add that to the equation too, where you're kind of looking for a mix of variables to really meet your criteria of what you look for when trading.
Last question here, Jake. It's pretty early. I mentioned that you're in Denver, so it's like 6:50 a.m. this morning, or right now. Is this when you do your charting analysis, or when do you do your homework?
So a lot of my homework is watching the market during the day, watching to see if the bid and the ask is skipping. So I look at the spread a lot. So that's part of my homework, is watching real time, just how the spread and the tape is moving. And then after hours, let's say, in the evening is generally when I do my homework. As much as I love getting up at 5 in the morning, it's generally a little slower than this. I'm not as up, if you will. But I do get up early. I have my own kind of clock that's been going for over a decade now, that I'm just naturally used to waking up when the market's open. So that really wakes me up in the morning. But when I do my homework, it's generally right after the market closes, so it's fresh in my head and I can kind of put everything together.
All right, Jake Wujastyk from TrendSpider. Jake, thank you so much for the charts and the trades and the discussion, and have a good rest of your day and get some sleep.
Hey, thank you guys for having me. It was great being on. And if anyone has any questions about TrendSpider, please feel free to reach out.
All right. Thanks a lot, Jake.
Thanks.
8:52 here, guys. Joel, anything happening?
No, we're just kind of stuck here, and right at the last after hours print of 2807.50. That's just like the magnet trade here. The key for the upside will be to take out the close. That was 2810.75, and then your next target is your pre-market high, 2818.50. Not a lot of resistance in there. As you saw when we came down on Friday, it was a pretty wide open area. So if the bulls want to take this up and take it up early, they're certainly going to have an opportunity looking at the technical levels, but you got to get green first. That closed from Friday, as I mentioned, 2810.75.
I mean, the market just sits and it's hanging out, but there's a lot of sell imbalances. So I'm actually surprised the market is still trading green after all those sell imbalances at the board, and they're growing. They continue to grow here. So one of two things is going to happen. All these sell imbalances are going to flip to buy, or the market's going to come in. So I'm betting the market's going to come in. I've been short and SPY here just because I think these imbalances are real. I think they're follow through from the previous day. And I think the market's going to open lower. So a little bit lower anyway. So Qs are still trading the red. I mean, you're basically still flat here for all intents and purposes, with SPY being up 0.05%. But I'm seeing like Hewlett Packard, 101,000 to sell. Bank of America now 268,000 to sell. The banks have turned red since we gave you those imbalance data. When Bank of America was up 10 cents, just at 8:30, it's now in the red. Morgan Stanley 49,000 to sell. IBABA 79,000 to sell. Twitter 81,000 to sell. G 290,000 to sell. I can go into Visa and MasterCard. Visa 50,000 to sell. MasterCard 16,000 to sell. $230 stock, though, so 16,000 is somewhat significant. Nike 45,000 to sell. I was scrambling to find anything with a buy imbalance.
Hey, Dennis.
So how are we trading out? That's what I'm asking.
Stockhand says, Dennis, that's just retail selling based on Friday's action.
Well, we don't know who's selling. I mean, I don't know how we, and
Right.
I'm just saying, I don't know who's selling. I wish I did. They don't tell you who's on the other side of this, so we don't know if it's institutions following through. We don't know anything. I don't know where we're. I'm making a trade here right now when I short SPY. Is that this is a trade that from the imbalances that I'm reading, the opening imbalances on the NYSE.
Okay.
It is no. I want to explain it to the listeners, because when I say short SPY, it doesn't mean I'm shorting for the next month. I'm literally shorting SPY to cover at the 9:30 open right now, because I think we're going to open down. So I'm making a trade right now. We're up 0.07%. I think the SPY opens in the red, because I think these imbalances are real, and I don't think they're going to flip to buy. It could change. I mean, if all these buy imbalances, and I'm getting, maybe the algos are listening, they're trying to punish me right now because we're, starting to go up a little bit more. But I'm just reading, what I'm reading in some market information for the open, and it looks weaker to me. But that being said, things can change. And if all these sell imbalances go by, I will cover my short on the SPY and eat the loss. So this is a trade for the next 35 minutes. Just saying, I think we open lower, but I might be wrong.
The algos can hear you. They can hear what you're saying.
Yeah, they're saying, "Oh, Dennis is sure. We better buy this up and down, shake them out."
Absolutely, the algos are listening to you as we speak.
They could. The algos listen to everything. So thousands of people listen to the show. Could be.
There's a lot of algos listening to this show.
We're
there is. I'm telling you.
Joking and stuff, but algos aside, the algos, they're not that we're listening. That was a joke when I said that originally, a complete joke. But I mean, there's algorithmic traders that are trading everything. Now, are they trading off of what I'm saying? No, they're not. I mean, we're just listening here and we're just, looking. But when I'm talking, about a lot of these short-term strategies here, I'm a short-term, I'm not a scalper. I'm not scalping in milliseconds here, but I make short-term. This is a 35-minute trade I'm putting on right now. Shorts buy, hoping it opens lower. I'm down in that trade right now. It's went up about 15 cents a SPY since I put that on. No idea why, because like I said, the imbalances aren't indicating that we're going to open higher, but somebody else is reading something in, and maybe there's something else. I'm on a live radio show. Maybe somebody else said something. Maybe somebody said something on CNBC. Maybe there's no reason at all. Maybe we're just chopping around. I mean, a 10, 15 cents move in the SPY when we moved, 40 handles on Friday is not very much.
No,
not much. So when you're putting on trades, you got to put them in perspective too. I mean, you're never going to get it perfect. So, and when you have, you're going to have volatility today. That's one thing I can promise you from the move on Friday. There's going to be either people buying the dip or there's going to be people selling this little, pop that we've had this morning, because we are significantly off the lows too. How low did we get overnight?
Basis the S&P is about 18 handles lower.
Yeah. So now we're up to, we're 18, 20 points off the lows here now. So I don't know. I think I'm reading the balances. It looks like we should open lower. So we'll see what happens.
All right, let's get to Canopy Growth real quickly. CGC, they announced this morning that they had received government approval for a cultivation license for its New Brunswick facility, so they get to grow more weed. Hooray.
Pot stocks got hit on Friday too. I mean, they've been flying high, no pun intended. So not surprising. Anything that was Momo was getting hit. So my Aurora Cannabis was down significantly. CGC was down. Kronos was down, breaking trend even there. So that one actually looks uglier there. Get a little lift here on the CGC here this morning, but you got lots of overhead supply. So it's hard to get excited to get the 47, 48 area. Sellers all over the place. So if you're jumping here at 45, 30, yeah, there's room to 46, 47, maybe $48, but I think then you run into overhead supply issues. So I'm more of a sell the rip on CGC than buy the dip. Just not liking that chart.
Let's see what happens at Friday's high. If in fact we get there, got to pop up near 46 earlier this morning. 46.04 was your close on Thursday. Friday's high right there at 46.14. So that's my area of interest there in CGC.
And other news, the only other news that we didn't get to this morning was Avaya. We had the headlines, was it last week, that they were considering a leveraged buyout? The headline this morning is that the company is considering a buyout offer around $20 per share, AVYA.
Well,
stock's up significantly on that news. So this is just a rumor, or is this actual news?
Yep, this is
from the company, or from
not from the company.
Okay, so who published this rumor, first of all? Secondly, I mean, if they're looking for 20, it's up 30%. So somebody believes that this is going to happen. I mean, risk arbs are pricing something up $4. So, it's Reuters. It's from Reuters. So Reuters has usually got they're usually pretty solid. So Avaya, considers leverage buyout 20. I mean, that's a wild card too. I mean, if it doesn't work out or if it isn't true, the thing will be right back down to 13. So you're buying at 17. You're looking for another 3 points. I mean, risk reward here for me is probably pretty even. I don't really see an edge here.
Nope, no edge at all. And for me, if you are buying on this kind of speculation, then you would just want to see it go through that pre-market high, right? 1769, get it much closer to that level that it's supposed to be leverage buyout at. So if in fact we don't get to 1769 off the hop here, then I look for a little bit of a fade. Of course, you got to keep your eye on the news on this one, but they're still pricing in $3. It's not going to happen. So we'll follow it closely. Spencer, do you anything else here at the 9 o'clock hour?
Nothing else for me, guys. Are you going to miss me when I'm gone the rest of the week? I think you will. Well, I'm not sure about Joel, but I know Dennis will. I will be gone.
When are you leaving?
Tomorrow morning.
And you're gone all week?
I'm gone the rest of the week. Yes,
It's me and you, Dennis.
The gremlin's gonna come out, Joel. You got this. Joel's pretty good last time. I think Joel's starting to get this.
You'll have Chris here to guide you.
Yeah, I'm gonna have Chris help me out.
But
just so I don't have to catch your wrath. I just wanted to make a post here real quickly.
Yeah.
Did that kids webinar last week. What a great turnout. These kids were unbelievable. My buddy Jason Chubnell, better known as Chubbs, recapped the article really nicely. Put all 3 videos in there. I'm putting the links in here. So if you have any youngsters from 8 to 12 or people that want to learn a little bit more about the market, there it is, the recap of the article and the 3 webinars. You're going to need some time on your hands to do it because each session's about 30 minutes. But man, it was a lot of fun. And if you have any comments, any criticism, you like it, you didn't like it, boom, send me an email, joel@benzinga.com.
Or just send Joel a letter in the mail, the old-fashioned way. If you
I'm not
find,
giving my home
if you
address.
can find his address. Okay, that'll be it for our show today. Thanks to everyone in our chat. Thanks to Jake Wujastyk from TrendSpider for joining us today. We greatly appreciate that. If you missed any part of our show, you can catch our podcast, iTunes, SoundCloud, Stitcher, TuneIn, or Google Podcast. Please remember, everything we say on this show is for informational purposes only and not meant to be investing advice. Have a good rest of your week, everyone. I will see you next Monday, and Joel and Dennis will be back with you tomorrow. Have a good one.